And to our panelists, there's a reason why I wanted you on stage at the same time as Monsieur Oudéa through that excellent keynote speech, which really laid the groundwork for what we're going to talk about over the next 45 minutes. And it's because we had the whole supply chain on stage at the same time. Because this is obviously, as Monsieur Oudéa said, the key to getting this right is obviously about cooperation. And let me first come to you, Licia Naronia. When it comes to the paper that you're presenting today, how can sustainable development goals be financed to make a positive impact? What do you think the real secret is to keep the momentum going and to make a difference? As we were saying there before, there's a huge amount when it comes to the sustainable development gap financing.
Thanks very much, Nina. I do have a short presentation, so do I go up there? Do you want me to sit here? How do you want me to?
And I don't know most comfortable.
Who is, yeah, okay. So just to answer your question first, in fact, Mr. Oudéa did some perfect entry points for me because he spoke of the need for looking at stakeholder engagement. He spoke of the need of mobilization of different groups of people. I don't think I need this anymore, right? So, and he also spoke of the need for a real engagement and an understanding of what the issues are. So there's a perfect synergy there. Ladies and gentlemen, it's a privilege to be here this afternoon and to be part of this distinguished panel up here. My task is, as you said, Nina, to really briefly present to you this wonderful paper, which has been put together by the Positive Impact Finance Initiative under the able leadership of Dennis Childs of Société Générale and Andrew Parry of Hermes. And I do thank them very much, and all of the partners who are here in the room today, who are part of this paper, and also my colleague Corinne Abb, who leads on this initiative. So what this report is saying, it has 4 clear messages. And Corinne, is this presentation up? Okay, so the first one is the financing gap. And we heard clearly from Mr. Oudéa that we have the SDGs, and SDGs are all about impacts. I don't know if we have them up here, but the 17 SDGs are really about creating impacts. But we have a short timeline. We have less than 15 years now to get there, and we have a huge financing gap. And the financing gap, I mean, using the 6 trillion of UNCTAD, the financing gap is about 2.6 trillion, and this just varies across the various regions. As you can see up here, you have the advanced countries with a gap of about 10%. You have the emerging markets with a gap of greater than 50%. And in Africa alone, there's a gap of greater than 85%. And so if we want to do something which is drastic, if we want to really change the way we finance this, and the question that Nina asked, the message from this report is that you need to look at the business models. And that takes me to the second slide. And the business models are really what this particular paper focuses on, the need to make them business models based on impacts. So the impacts are going to be the key to rethinking the way business functions in order to be able to bring in the kind of financing that is required. So it's not going to be incremental anymore. It's going to be much more based on multi-impact solutions. And I've got this next graph which clearly shows this movement towards impact-based business models. And what it suggests is that you work backwards from impacts. So you need to understand what are the impacts that are needed. So they may be aligned with the SDGs, they may be aligned with mobility, with energy efficiency, with housing, with the various services that are required in a locality, in a region, or in a country, and then work backwards to understand what are the kinds of solutions that are required. And the argument that is being made is that if we were to adopt this kind of a business model, you would be in a different situation in terms of the kinds of investable pipelines that you would have, and therefore in the kinds of financing that would come into the market, which would then reduce the gap that we've been talking about. But in order to be able to do that, and this takes me to the next slide, it's imperative that we look at the methodologies that we are adopting in our planning. And what the paper suggests is a need for a holistic approach to impact appraisal, which allows you to not just focus on the kind of trajectory we've had so far of looking first at the negative externalities and then at the positive externalities, but really looking at all of them together and coming up with solutions which are much more impactful based. So the argument is that first you need to have working back from the impacts. Secondly, you need to adopt a holistic approach to impacts. But to be able to do this, and this is what Mr. Dea was already alluding to, you need to focus on the relationships, on the ecosystem that supports all of this. And that takes me to the last slide of this paper, of this presentation, which is that every stakeholder has a different role to play in order to be able to create this transformation. You need the governments to be very clear about what is required, what are the targets, what are the services required, and obviously they have an important role in all of this. But you also have the demand and the supply constituents coming into this kind of an operation. So the need for the ecosystem to be reactivated around impacts, and that's why it's called an impact ecosystem. But Nina, in order to be able to really understand where this is happening and how this can be, can be taken forward, you have this wonderful group of speakers here, and they're going to actually tell you examples of all of this. So thank you very much.
Thank you very much. Thank you, Rita. I'll give the microphone back. So, gentlemen, and also Lija, let's you can hear me. Great. Let's start by the needs on the ground. Hamid Tawfiki, in Morocco, for instance, in your example, you can speak to both a country that has many sustainable development projects that would like to attract sustainable development financing to make a positive impact, but also you can speak from a private equity point of view with state money as well. What are your thoughts on the subject?
Thank you. In order to contextualize, in fact, what I will be describing as a thought and also the action we are developing in Morocco, maybe just for the audience, let's introduce, in fact, my institution, which is CDG, which is Caisse de dépôt gestion, which is a public institution, quote-unquote, national development bank, local national development bank. So we were, as an institution, in fact, were pretty much involved in development. And development is something which is part of our DNA. And we started, 10 years ago, we all used to say, not only in Morocco, but elsewhere, that sustainability is an issue for the North and development is an issue for the South. But in fact, now we are thinking about sustainability as being embedded, in fact, in the way we think our development. So in Morocco, we started having the constitution, 2011, that put sustainability development as a right, in fact, for citizens, and we followed by having a national strategic development plan for sustainable development, and it was approved in 2017. Based on that, we effectively we have the government developed a series of objectives and targets. I think 169 targets clearly. The question now is, in fact, implementing them, and this is, I think, the main issue, because we have several challenges. So we were talking about SDG, but we still have to broaden, in fact, the ownership process of SDG, in fact, locally. And this is something important because people, they don't speak fluently SDG everywhere. So you have to explain to them how these SDG are, they relate to them, their day-to-day, in fact, concern and problem, and how they deal with their first concern. As you know, for example, Morocco, the unemployment is key. So, and also the inequality. So this is the first challenge. The second one is to align, in fact, development priority with and objective with national priority, because when you have the strategy for sustainable development, you have to make sure that the existing sectorial policy, that they converge. So you have a series of challenges. One is important, and I will come back to, which is the monitoring, how you measure the impact. And the last but not the least is, in fact, the challenge with regard to financing. And this is something which is key, because I will put a link, in fact, with what was presented before. Is we all think that yes, we have a financing gap, and we need to have a project, and we hear that we don't have bankable project and so forth. which is true. The idea is how do we structure the project, and what we have, for example, today in Morocco, we launched a lot of huge infrastructure projects since 2000. And one is, which is everybody is familiar with, is regarding the renewable energy and the solar energy in the south. But the issue now is that we have a situation where the huge projects that were developed and financed, now we are looking at them and we can see, in fact, for some of them, and not the impact, but the return, in fact, from this investment. And the question here now is how can we structure differently, in fact, the project to make sure that we realize the impact that we expect from this type of project. And instead of having the financing coming at the end of the chain when we design a project, to make sure that we place the financing in the beginning of the structuring of the project. And
already in that answer of yours, you've touched upon so many of the key issues, which is the issue of understanding, so speaking fluent SDG, and then as well as being able to measure and monitor from here on. I want to come to you, Thierry, because from a corporate point of view, obviously you're creating an ecosystem of products that people will use with a completely different fashion in the future, multifunctionality. From a corporate point of view, where do you stand in the equation of being able to make a positive impact in terms of the financing the SDGs?
Yes, and first of all, thank you to participate to this excellent event, and this is a rare occasion to have this type of opportunity to talk about as an industry and a corporate position. So, of course, sustainability is critical for us, for our own development, but also where we contribute. And one element was mentioned earlier, which is the element of the lamppost. Lamppost is one of the key elements that we find in the cities and many other places, but mainly in the cities, but which is changing and probably changing the world in the future. Actually, we think that the lamppost is moving to the smart pole and a complete different aspect. We talk a lot about smart and why smart, and in the moment we talk about a lot of those elements which become smarter. But the lamppost is really the place where, in the future, we will find something which is a much more evolutive place. As we have seen in the graph earlier, there is a lot of connectivity that we can bring into that. This is also a place that will be offering in the future the capability to have modular adaptation in the local environment, and to be close to the local needs is very important. And this is also the place where in the future, we will also have this element as a big part of more smart city development, up to potential smart city as a platform in the future. And that's something that we will probably talk about it later.
Hello, right. I want to get your thoughts, Andrew Parry, because as we were saying there before, we're sort of three years into the adoption of the Sustainable Development Goals. You're from the asset management side of things, and obviously we heard Monsieur Oudéa from the big investment banking side of things. Everybody has a different financial horizon, don't they? So how does the asset management community view the SDGs and being able to make a positive impact? Does the investment time frame also make a difference?
Well, I think am I on? Yes, there we go. I think the SDGs help with the whole debate about time frame. It's great to be here with somebody from the corporate sector, somebody from the private markets, from the OECD. It just shows the complexities of the challenges that the SDGs represent. It's not about simply remapping existing activities. It's about an awful lot of change. It's about a journey of innovation, of networking, of understanding. And I think one of the biggest opportunities that the SDGs has represented for the asset management industry is to understand them not as a series of below-the-line risks, but increasingly to drill down and see them as a fantastic set of opportunities for future growth. After all, they represent the most pressing, underserved or unmet needs in global society. So if we can find innovative ways to finance, innovative business models to address, and then innovative ways to package and represent those in products that we run, then they're an exciting opportunity. They almost represent the beta of future growth. And I think that's the journey the asset management business industry has been on. We've focused for a long time on environmental, social, and governance factors, which every company has there, if you like, complex series of risks. The SDGs actually, if you see them as that set of opportunities, they represent exciting top-line growth opportunities. And so for the asset managers looking for growth in a difficult world, we're in a world of transition, a transition in politics, technology, climate, and globalization. And this is a way of helping us, I think, navigate the future better.
Now, part of those decisions come from a top level, don't they? But also when it comes to your clients who are buying your financial products as well. How do you transmit the message to them? How much demand is there for sustainable products? And is there room for that market to grow significantly from here?
Well, if we looked at it 3 years ago, the conversations largely around sustainable finance, sustainable investing, took place primarily in Europe. And then, even then, within a fairly narrow confines. Not many people 3 years ago probably even knew what the SDGs stood for, let alone that beyond the 17 goals, there are 169 targets. This year, I've seen an explosion in interest, not just in Europe, not just across private wealth, but across pension funds, institutional investors. In America, I've been to America a lot this year, and the interest in a more sustainable way of investing, despite some of their political challenges, has actually accelerated. It's really, really changed. It's a sea change in the last year.
And Lucia, presumably this position paper here will give a framework to all of the individual stakeholders to take it to the next level just 3 years after the SDGs development.
Absolutely. And just to reiterate some of the things we've been saying, there are 4 key aspects of this. One is the time horizon. Obviously, you have to start rethinking in terms of shorter term to longer term horizons of investments, the relationships that we've been talking about, because it's not just between the different financial streams, but also between the finance and the corporates, the finance, the corporates, and the government. So a repositioning of all those relationships, the data and the methodologies. At the meeting that we had before this, it was very clear that this is only possible if we have access to the kinds of data which will enable a much greater positioning or improvement in the way we plan for investments. And finally is the reorganization of demand, which is more based on impacts rather than, incremental kind of changes. And so, yes, it does position a new framework, not a new framework, but a framework to respond to the SDGs and to filling in the financing gap that we've been talking about.
And Hamid Tawfiki, when it comes to measuring and monitoring the impact that this type of financial arrangement this type of finance is having, how long do you think it'll be before, as you said, people will start to understand and speak, as you said, fluent SDGs? Because presumably when we get to the holistic, when we've tackled the whole of the issue, we won't need to remind people that certain business models are indeed sustainable. It'll just be taken as read.
No, I agree. I think it's quite a challenge with regard, in fact, to the monitoring and measurement. I think the effort need to be allocated in the energy, even if it's solar or power, whatever. But it's something which is important for a country. That's what's happening. For example, in Morocco, there is a kind of squad team that was put in place within the Haut Commissaire au Plan, which is planning department, and focus on trying to measure, in fact, the SDG and the impact. But I just want to say something, which is, I think, with regard to the business model. We are in situation for Africa, for emerging market, for Morocco. When we look at, in fact, development and what kind of business model, we see, in fact, what's happening, for example, in Kenya, the development of the mobile phone rather than go through the path of the fixed line. It's exactly the same for solution that are being offered, in fact, for various businesses. Let's bear in mind that the future of these countries should not be only a copy of the past of the North. I think which means that there are space, and we are in the situation where we can create a new solution and think about new solution that take into account our local constraints and also the expectation, in fact, of local people. I think that's why this kind of new business model that integrates different type of impact and try to design, in fact, a solution which is, so far there is no copy of it elsewhere. I think it's something which is online with what we're trying to do. It's difficult, it's not easy, but I think we must take this direction, and we have no other solution than doing it so.
Thierry Bonon, you were talking before about some of the tangible examples of how this changes how business like yours does business and finances the business that it does.
Yeah, I think one of the tangible evolution that we see at the moment is really around the smart cities. This is really a place where all across the world we see now investment. We think, and in Nokia, the majority of our investment are really for the future of the humankind. And we think that over the next 5, 10, 20 years, there will be so many transformations. We see them with so many of our new technologies. Of course, one of our major investment at the moment is on the 5G, what we call 5G, which is first a mobile transformation of the infrastructure, but also it will touch the complete industry revolution. So we think we are at the edge of a new industrial revolution with this transformation. 5G will be one of the key elements of smart city. When we talk about those type of investment, we need absolutely to understand how we can finance not only local projects, which are critical for the development and the measurement of the performance of the sustainability in the countries, but also to have investment which are global. And so how do we understand the financing of global investment, which will be about global standards, and also build the platform and the infrastructure for that environment?
And I'm glad you mentioned the issue of standards, because that's exactly where I was going at the moment. Again, when I started with introducing the subject, time and time again, when you look into this subject, you hear of the mismatch, as you said, the business model issue. In terms of sort of finding a standard that fits a standard that we're progressing towards, what would you say this from the corporate perspective? And then I want to ask you from a finance perspective.
For us, standards are critical because standards are the way we can safely invest in R&D, which will be multi-year investment. And this is something which is critical and to be reused across the world in the different continents, in the different countries, and also up to the level of the city and the development. Obviously, we'll have to see many different business models, because with all those transformations that we see in the technology today, nothing can be assured over a few years about the performance of the investment. And the more we go to local projects, the more we go to local investment, the more risky are all those investments from a technology standpoint. But if we can be as close as possible to global standards, then obviously the investment is much safer.
Do you find, Andrew, that this issue of wanting to invest in local projects, but then at the same time, as Chair was just saying, having to deal with as an international company with shareholders, the issue of standards is something that is an issue? Have you ever come across tangible examples of that?
Well, I think there's a huge desire to get more standards, because the big problem with the data at the moment that relates to either sustainability or environmental and social factors can be inconsistent across data providers. I'm sure the corporate sector gets inundated every month with spreadsheets and requests for this data. So I think there's a growing awareness that if we can actually move to a more standardized, even maybe a mandatory way, that actually might help the corporate sector, because it gives them a common language, and instead of filling in 30 different reports, they're actually reporting in a consistent manner. So I think that sort of common language is really very important, because one of the inhibiting factors for many of my clients, particularly pension funds, is a confusion around acronyms and synonyms to describe what we're doing, from impact to sustainable to ESG to SRI to SDGs. They do get assailed by all these things and get very confused about what they all mean in the context of achieving returns that have to be linked to meeting their financial obligations. So I think the more that we can do to educate them, provide them with the notion that these aren't just sort of non-financial items, these are extra financial items. These are part and parcel of developing long-term value creation within businesses. And it is about that, hopefully, lengthening of time horizons, but also opening up many pension funds to the idea that sustainable investing is not about putting social and environmental purpose ahead of returns, but actually an excellent way of finding new opportunities, particularly in private markets.
Like this will be welcome then to obviously clients and shareholders like yours.
Yes, one of the things that I have more conversations about than anything is what are the frameworks, what is the language that we can use to identify what we're doing. Now, it's got to be put in the context. We talked about local context, global context, and it's got to be put in product context. So there'll be no one perfect solution, but we do need to find this common shared language, and starting with the data. And the data is going to get more difficult. You know, AI is changing completely the way that we look at data. We're going to go from a regime of where data is disclosed to where increasingly data is going to be discovered. Big data sets, AI, etc., are going to really challenge all of us, corporates and investors alike. And that, for me, is a huge opportunity, the advances in AI in this area.
Let's see whether we can take some questions from the audience. I believe there may be some questions out there. Could you just raise your hand if you have a question? Anybody see any? No? Licia, I'll come back to you then. Where do you think the Sustainable Development Goals and financing the Sustainable Development Goals, businesses who are sustainable, with this framework, where would you hope it will go in, say, the next 5 years from here? Where do you think it'll go?
You know, you asked an earlier question which links to what you're asking now, which is what is at the center of all of this? And the center of all of this is really human needs, the planetary boundaries, and of course the need for prosperity and jobs. And that is what the Sustainable Development Goals are about. And so a common global standard would be the Sustainable Development Goals. And it's obvious from what we are seeing in the last 3 years that there is increasingly a common language being spoken, to use your words, Andrew, towards this kind of a thing. So if we were to have frameworks which would take us there, we would be in a position, I think, to do much better than we've been doing so far. But we cannot stick to just this one framework or this one report. And this is where I also want to bring in some of the other work that we're doing at the UN, which is, for example, the 10-year framework of programs on sustainable consumption and production, sustainable public procurement, because these are levers by which you can actually implement or, what shall I say, roll out the ideas that you have on impact-based economies further and quickly. So you have tools all along in the real world, in the real economy, and now you need to connect these with the financial sector. And if we could do this connection, I believe you could take this quite far. I can't give you a guesstimate, but I can say that we have the right steps towards this.
Where do you think the connection needs to be stronger? Where do you think the translation, is it a translation issue? Is it just an issue of people getting used to understanding what businesses they can finance that are sustainable? Where do you think the connection is to make that 2.5 trillion gap apparent?
I think it's a realization that we're in it together. At the end of the day, if economies have to flourish, if the financial sector, the business sector, everyone needs to flourish, we need to understand where the world is moving towards. And so the key thing, therefore, is to have the larger vision, because that will enable the deconstructing of this larger vision into the global, the regional, and the local. And unless, as you said earlier, everybody understands and starts embodying these sustainable goals into their thinking, and I'm not talking just of the CEOs of companies, but every individual, you will not be able to make that change. So I think every consumer, every producer has a very clear role to play in terms of these impacts. And when that happens, and the financial sector will have to deliver, because they will see that this is where the demand is, and whether it's the investor, whether it is the pensioner, or the funds that you have to put in, you will realize that unless you are sensitive to what is required by the world, you will not be in a position to move this forward.
Hamid Tawfiqi?
Yeah, I just want to add one point. I believe that if we want to ensure sustainable financing of SDG, it has to be rooted into the local market first. Because if you do it without the local financing market or financial sector, because I think it is important that to have this kind of diffusion of the concept, the objective within, in fact, the field, and not having the local market being crowded out and put aside. I think it is important. This is important also for capital market. I think we are talking about investment management, and asset owner also should be more and more involved. And to do so, you have to make sure that local capital market is developed enough to make sure that it participates to the financing of SDG.
But that's not possible in every market around the world,
No.
is it?
No, I'm talking about, for example, Morocco. This is one of our missions, is to work on developing, in fact, the local capital markets, be it on equity or on debt and so forth, because it is key. We have pension funds and we have insurance companies, so we have to make sure that we create, in fact, the instrument to enable them to invest. And if we succeed, and what we are doing, we start doing it for infrastructure financing, for example, as we close a transaction with regard to the desalination project, which is the biggest plant, in fact, in not only in Africa, but I think in the world. And having, in fact, a pension fund being involved in the investment, it makes it more comfortable for international investment to come in and to compete. So this, yes, I think for the financing gap, this is important, because if we don't involve and put the energy in order to make sure that local players are also involved in the financing, I think it will maybe it will take time, in fact, to achieve financing of the whole SDG. It is important. For me, it's a necessity to make sure that local players are not being crowded out. We have to invest.
Thierry Bono, can I ask you a question? Is there now we're here talking about positive impact, but is there something negative that needs to be avoided to prevent people being put off further down the line? As a big corporation like yourself, looking at many different projects locally.
We see, actually, this is my corporation, Nokia, is part of the telecom and IT industry. And it's clear that if you look at the last 50 years, we have an example of value destruction through the internet. Clearly, with the introduction of the internet globally, we have seen a reduction of the production and the value created. So this is probably one of the first industry revolution which has been destroying value. Of course, prior to that, the mechanical transformation has been something which is creating a lot of value. We think, and this is why sustainable development is critical for us, is that we think that the next generation, and especially enabling by the 5G generation, with all those transformations that you mentioned earlier about virtual reality, augmented reality, the robots, and all of this part, will create a potential new value. But of course, there is a risk associated to that, because if we are not succeeding in this transformation of the world, and if we are not succeeding in creating value in the transformation of the industry, then that's a value for the global planet. So the risk is associated here, and we have an example just in front of us for the last 20, 30 years. So that's something which is a critical element to consider, and this is why, as Nokia, we have created this framework which you can find, which is called Future X Network, which we think are the type of enablers where this new open platform, because everything will be open, can develop much more value, where not only global industry can transform, but also by having an equivalent framework all across the industries, we can really have the local industry to contribute with the same value and the same richness into what the global infrastructure could do.
And just a final word, Andrew, from 10 years from now, would you hope that where do you think we would take this conversation 10 years from now? What would be a positive impact for you if you had to look at it holistically?
Well, I suppose the ultimate outcome is we wouldn't be talking about it in 10 years because we've actually done it. You know, I think really for me, the best and the biggest outcome is this just becomes integrated into business as usual. Seeing it as sort of something siloed and different does limit its ability. So integrating it into the way we just naturally think and the way that we think about the opportunities out there, I think is really very vital, particularly given some of the big pressing challenges of the world. I was lucky enough to be in Boston a few weeks ago, and I read one of the quotes on JFK's inaugural address, and he said, if in a free society we cannot help the many who are poor, we cannot save the few that are rich. And I think this is really very important because these are societal-wide issues, environment and society. And actually, Thierry's business will not thrive if we do not tackle these issues. You know.
Please finish your point. Do we have one question from the audience, or I believe we have run out of time, but if there is a pressing question from the audience, there we have one at the back. Make sure we get some in. Do we have a microphone for the lady in the back? There's over there on the left. Thank you. Great, thanks.
Hello, so I'm Harper with UN Environment, and I just had a question to the panel in general. So we've seen over the weekend the protests in France regarding carbon taxes and regarding increasing fuel prices, and we see that people have been increasingly distressed by this, and the protests have been very energetic and emotional, and I think that we'll see this more and more as we see rising fuel prices in accordance with carbon taxes and things like this. So my question is, when we're talking about thinking about impacts on finance, a lot of financiers are looking to progressing policies in order to make their commitments for the long term. And so my question is, as we see these reactions from civil society, how can we expect financiers to react to this, and how can we expect policymakers to react?
Andrew?
Well, I think these protests, you know, obviously, if people are suffering from fuel poverty and low incomes, you can understand the challenges. But I think the big problem is that we all have when we're looking at these things is that these are system-wide issues. We can't just look at it from supply, we have to look at it from demand. And it is what we're trying to do is create a behavioral shift right across society. And unfortunately, psychologically, we will all give up those things that are easy to give up, where there's no economic cost, but we'll continue to do the things where we feel there's a personal loss. And it is a challenge for policymakers. Policymakers are trying to create an environment where there's positive momentum, changing behavior. You know, when the oil price went to $144 per barrel a number of years ago, in America you saw miles driven fall by 5%. So unfortunately, pricing and economics do play their role in changing corporate consumer demand, and I do think we have to consider that. Now, getting buy-in comes back to that common language and that common purpose that we're all trying to achieve. And it's not easy, it's not trivial, but we have to see it as this broad system-wide approach.
And Lydia, we're seeing that on both sides of the Atlantic, aren't we?
Absolutely, but Andrews put it so well that this is exactly it. We just need to be able to explain better what the purpose of these taxes are, what the purpose of what is the end point of the game. And once people start realizing that and they buy into this, and that's when the conversation will change. So this is across, I mean, the carbon pricing, as you know well, has always had an issue with it. There's always been winners and losers, and there are ways in which you can address this, and this is one of the key contentious issues. But again, you need to focus on the buy-in. You need to focus on being able to help understand or help everyone come on to the reason why you have these things and who will be affected most when they're introduced and how to help them win over that particular difficult moment.
Again, though, this is also a time frame issue, isn't it?
Absolutely.
It'll take a long time for people's way of lives to change. Hamid, Tawfiq, for instance, in Morocco, away from your business specifically, because obviously you mentioned very impactful projects like the desalination plant and so on and so forth, how does one sell that message?
You know, I'm Moroccan by birth and French by education, so I'm torn between wearing my yellow jacket or having a siesta, but I will try to do both. So you have I think the issue here when we were talking about the tax, and we have something equivalent, for example, in Morocco, where we launched a very important and huge project since 2000. And now when we take kind of stock of what has been done and what are the impact of this type of infrastructure, we realized that the impact on employment was nil. Not nil, I'm just exaggerating, but the impact was not there. So the people, in fact, concerned is to have a job and managing also inequality. So you have to have in mind these type of objective when you design the impact. And this is why we are rethinking, in fact, the way we need to structure a project, not only to improve their profitability, but the impact that they have on people. And I think this is exactly the same thing, because we cannot look at things only on what I call in general terms or on average, but you have population that cannot be left aside. You have to deal with it, you have to manage it, and you have to put in place the system or the solution that can enable you to move smoothly, quote unquote, this transition. So we have the same thing, which is employment, youth employment. So we have to find a solution when we design a project to take into account the education and employment. This is first. It's not only having a nice road and an airport and so forth, but we have to do this.
Okay. Let's see if there's one more question from the audience, I believe. Ah, yes, we do have one over there. If we could get the microphone to the third row back.
Yes, sorry. Hello, good afternoon, Nicolas Pio, co-founder and CEO of Till Capital Partners. One question on, in fact, on the social cohesion side. Don't you think we should put in place a very specific reflection on social cohesion, because we brought the whole community of corporate investors, etc., around climate change. But the rising inequalities, I think we see the devastations of wars and everything and migration and how it raises populism everywhere. Don't you think we should absolutely tackle this, because this will be also the enabler to any sort of environmental policy that we may implement in the future?
Thierry, can I ask you if you want to take that? I know it's a difficult one, but from the corporate point of view, actually, it's
Actually, I'm not sure a corporate can answer to the extent of that question. Of course, we are contributor to this type of development. I think the closest I would see on our side is what we call the digital transformation. I mean, the digital transformation is one of those transformation of our own corporate, of many of the corporate today. And we talk a lot about creating new environment with robots. And everybody is talking about will robots create new job or destroy more job than they will recreate new job. So, and that's the challenge of even a corporate to say, yes, it will recreate more activity because the volume of activities, because the transformation of activity. But for sure, it will not keep the same. And a digital transformation in our corporate environment is something which is critical to anticipate but also very difficult to manage, because this is something where we need to have a very strong agility in the way year after year, month after month, we look at that transformation, those capabilities, and how across the world this is being developed. And so in Nokia we talk a lot about this. We talk a lot about how we transform our business, how we train people, how we transform our corporate people in order to be able to manage this. And the sustainability in that way is quite critical.
Populism, as this gentleman mentioned, and I specifically directed this question to you, Yoshi, because you work for a large corporation. You said that you were a startup entrepreneur as well. How concerned are you about the sort of political trends?
Well, I think we're all concerned, and that's why I used that quote. You know, that quote from JFK was very much addressing that, because it's about the system and the world, the ecosystem in which we operate. You know, we have the just transition. So work very much from the PRI, the Grantham Institute, talking about how we can have a better civil society. Also, I think, and Thierry's actually picked up on it really, that I think companies themselves are really beginning to rethink about what their purpose is in this broader society context. They are social enterprises. You know, they're not just about profits. They are some of the largest employers of people in the world. And actually, as the world begins to shift and those dramatic collisions between technology, between the climate, between demographics occur, so it causes companies and investors alike to worry about the resilience of returns on physical capital, returns on human capital, returns on financial capital. So I think we're all very aware of it, but it is complex. It's no one easy solution. But that word purpose, I think, is a word that I hear companies and investors talk a lot more about. And why? Because I think they're very worried about the polarization in politics and sort of an uncertain gap being left in the middle.
Andrew Perry, thank you very much for that point of view. I recognise we've gone over by about a couple of minutes, but I wanted to thank our panellists, so I won't spend too much time summing up. I think we've all found this conversation very enlightening. I'll start by thanking very much Lydia Noronha from the left, Hamid Tofiki, also Thierry Boinon, and Andrew Parry. Thank you very much for your time this hour.